Hello from Automotive Markets. This is Ahura, and I will be with you to review the US inflation data and market reaction. As always, let's first check what we had in the data, and then we can go further and analyze what we can expect from this data and these numbers. Inflation had surprise. I mean, data somehow they surprised us with only 0.2% CPI and core CPI increase only in April. They're lower than 0.3% expectations. However, even thought if they are slightly above the 0.1% registered in previous month. We know that the CPI actually fell 0.1% in March, but in April it increased by 0.2%, while the core inflation, which increased only 0.1% in March, in April it increased 0.2%. We will go further and we'll go to more detail to see why inflation fell in March and what happened now. It's increased slightly by 0.2% in April, but still they are lower than 0.3% expectations. On the annual scale, CPI from 2.4% eased to 2.3%. That's somehow this like positive data we can for the market. We can see that, okay, the inflation is somehow under control. However, if we check the core inflation is steady at 2.8%. They higher than 2% central bank target. So that's what we can say with this data, that inflation is somehow under control, but still it's sticky. So while the inflation is like that, the inflation is giving us some positive signal that it's under control. It goes how the central bank wants, but still way higher than the Federal Reserve 2% target with 2.8% core CPI in April. The real earnings, on the other hand, fell by 0.1%, which means that when the people they have lower income, they are spending lower, so that can control the inflation, which is good news for the inflation. Actually, we can say that the Redbook sales, also the retail sales based on the Redbook report, also slightly lower to 5.8% from 6.9% registered in the previous month. So generally, what we can say that with these numbers and with this data, we can say that the US inflation is somehow under control, but still sticky. But if you want to see and understand the result of the reason of this inflation numbers, we can say that, look, if we go here, we can say that, okay, the inflation, the headline inflation at 2.3% and increasing only 0.2% in April, but the food inflation slightly lowered by 0.1% in April, which means that that supported the core CPI also in annual scale. In the annual scale, the food inflation increased by 2.8% in line with the whole core inflation. But the energy price was actually we can say that the inflation driver was the energy price in the previous month and in this month. The energy price fell by 2.4% in March. That's why the headline inflation, which includes by energy price as well, fell by 0.1%. That happened in September. In March. So with 0.1% fall in March, the reason was 2.4% lowering the energy prices in previous month. But this month, while the energy price increased already again with 0.7%, we can say that the inflation also increased by 0.2%. Energy price on the annual scale fell by 3.7% still. We know why? That's the why is the oil price. We saw that the oil price from about around $70 fell to around $60. So that's that $10 lower oil price per barrel, which means that the energy inflation is lowering. As a market reaction, if you go to the charts and we can check the charts, we can see the expected reactions. Lower, the inflation was in line with expectations and lower, which means that it's under control, which is a dovish signal for the market. And so that's why we can say that the US dollar index, which was increasing the previous 2-3 days, now you can say that we can expect that the US dollar index to slightly lower. And we say that, okay, with this data, with this number, we can say, let's go in each one chart, you can see that better inflation, which was increasing in the previous days, now it's started to fall, and we can say that, okay, now the inflation is going to see a lower digits at 101.18 right now, but between 100 and 101 is the next target. We expect this data to put the pressure on the US dollar index. As it's for gold, while the lower dollar supports the gold, at the same time, lower expected for, the lower interest rate means that the lower rates for the bonds, and lower bonds rates means more demand for the gold compared to the bonds in the safety market. So that news can be somehow the positive for gold. It can be we can say that the gold price can have a positive side movement with the uptrend tendency with this data, the reaction of this data. Why we say that side movement with uptrend tendency? Because these data support the stock market. So the money is not the money in the market first goes toward the stock markets, and after it goes to the stock market, then we can say, okay, after stock market, now it's time for the gold, for some money to go for the gold as well. So which means money is not going to get exits from the gold. Still money is there. Some money comes from the stock market as well. From bond market as well. So the money from the bond market goes, part of that to the gold market, from the bond market, part of that goes to the stock market. So that's why we say that for the gold, that these numbers, these digits are natural with the uptrend tendency, but for the stock markets, also same, the natural with the uptrend tendency, because it's better, because still in a bigger picture, we can say that inflation still is sticky at 2.8% core inflation, much higher than 2% central bank target, man. That's like we can say that's still sticky. On the energy price and energy market, that these data means that, okay, the inflation is somehow under control, and the central bank can have more dovish policies, or at least they can have less hawkish policies, which means the positive for the stock market, generally positive for the production zone. So that's the positive for the gold, that's for the oil as well. But still, we have the reverse of more production, which is not going to support the oil price, which, so these factors, you're against of each other, but so generally it can be, at least we can say that it is that data wouldn't be negative for energy and generally for the oil price. They cannot be so much positive. That's for gold, that's for oil, gold, stock markets. About the cryptocurrency market, these numbers and these digits generally they're positive for the cryptocurrency. They're going to support the cryptocurrency market, especially the Bitcoin price. However, that's that from the technical point of view, about 100,000 is still uptrend. 101 we can say, but let's say more casually, but 100,000 is the uptrend. Breaching under 100,000, we can say that the uptrend can for now can be violated, at least for the side movement until 94,000, but the trend can change under 94,000. For now, we are positive still about the cryptocurrency market. That was the data and market reaction. If you had any other question, don't forget to write in the comment section. I'll try to get back to you as soon as I can. Have a good time. Bye-bye.